Hi everyone, welcome to another video by Optionables. My name is Saket and today in this video we are going to look at what happened to the markets, what we can expect from the markets tomorrow and what happened to our trades. So now if you look at the markets today, whole day the markets ended up consolidating and the opening to closing was almost absolutely flat. But the thing is, even though the markets ended flat, there was some amount of volatility in between. The market was moving plus 50, minus 50, plus 50, minus 50 throughout the day and it almost ended flat. So the thing is, such days are really good for intraday non-directional players. So whether you have done a short straddle or a short strangle, it would have given you very good profits considering that you haven't kept a very low stop loss because the markets consolidated completely. So now when we come to the stock specific or sector specific actions, so the thing is, one thing what we have to keep in mind is the banking sector, Reliance and the IT sector together contribute close to around 50 to 60% of Nifty's weightage. So that means technically these two sectors along with Reliance can control the whole Nifty in the direction they want. Now when we actually look at it, on one hand we had the banking sector and Reliance which actually went down. On the other hand we had the IT sector which performed really well. So we had two of the top sectors which were moving in opposite direction, and that's the reason you can't expect much move in Nifty in any particular direction. On the other hand, we have the metal index which has around 4 to 5% weightage, so that ended up falling close to around 2%. On an average, all the metal stocks went down. And on the other hand, we had the FMCG index which again has a weightage of close to 4%. Here, most of the FMCG stocks ended up performing really well and FMCG was the top gaining sector today. And apart from that, there were also some mid cap and small cap stock specific actions where the stock went up and down almost by 5 to 10%. So now when we actually look at the markets have almost fallen 18% from the all-time high. Nifty's all-time high was close to 18,600 and BankNifty was around 41,600 and BankNifty has fallen well over 20% from its all-time high. The next question is, since we have already fallen so much, and when you actually look at the US markets or the European markets, the numbers there are much worse. So Dow Jones was somewhere around 36,000, today it is around 30,000. Nasdaq was somewhere around 16,000, today it is trading around 10,000. So there the stocks have corrected almost around 20 to 30% and big stocks like Netflix, Facebook, all of them are down by 60 to 70%. So the question is, what exactly are we expecting from the markets then? So when you look at it, the valuation of Nifty in the last 5 years, when you take the last 5-year period, it is the lowest now. So the 5-year average has been around 20 and right now we are trading somewhere around 18. When you look at the historical average, we are again very close to the historical average valuation of Nifty. That means it is a very good time to start adding your stocks. The thing is, one thing which I would like to tell is while the stocks start falling from its all-time high initially, the sentiment would be, okay, the stocks are getting cheaper, so I will end up buying. So most of us will end up buying. So if the fall still continues, then the emotion of fear sets in. So once the emotion of fear sets in, even though we know that most of the stocks today are cheap, hardly few of us will end up buying because we feel that, okay, the sentiment is so negative, it might end up coming down and I will end up buying later on. And this is the very reason why people miss out on buying the stock market crash. So they would have witnessed the crash right in front of their eyes. So this happened during COVID also. So the thing is, once the market starts to crash, the news channels will come out with all sorts of negative news which will sort of make you feel that the correction is nothing and there is much more to come. But the reality is the markets would have more or less discounted most of the news which will be coming out there. So that's the reason, since the markets are below the 5-year historical average PE, so it is definitely a good time to start adding. And one more thing you should definitely keep in mind is whenever the market hits a 20% bottom, so on an average it has taken 9 months to 1 year for the market to completely recover. Just think about it. Today Nifty is at 15,000, so even from here if market has to recover and come back to 18,000, that's a gain of close to 25%. And historically we know that it takes around 9 months to 1 year to complete the recovery. In that sense, in 1 year you will be having 25% return just by investing in the index. Apart from that, we have extremely cheap stocks out there in market. If you see Bajaj Finance has come down from 8,000 to 5,000, a correction of almost around 40%. And on the other hand, we have Infosys from 1,900 to 1,300. We have Kotak Bank from 2,200 to 1,600. We have some excellent stocks which have fallen well over 20 to 30% and are available at a very good valuation to invest. And one more important thing is that we are not SEBI registered, and that's the reason consult your financial advisor before making any investments in the financial market. So now coming to what is the short-term view we are having on the markets in Nifty and BankNifty. So the thing is, the markets recently saw a huge down move when it broke 15,700. 15,700 was a very strong support for Nifty, and now 15,700 is broken. So that means what can we expect? Definitely we will expect a very strong resistance at 15,700 because it was broken with such good volumes and such high intensity. On the lower side, we must expect 15,000 to act as a psychological support. Even though the charts do not really suggest a good support at 15,000, it is a very good psychological level for it to act as a good support. So now coming to this week view, the view for this week is I am expecting the markets to consolidate between 15,000 to 15,700. So right now markets are around 15,300. So 300 points on the lower side, 400 points on the higher side. So this is a broad based consolidation what I am expecting from the markets. So the broader view still remains on the downside until we break 15,700. Close above that on a weekly basis, definitely the view still remains to be bearish, and once we do that, we can slowly start expecting a trend reversal. So now coming to BankNifty, the view again for BankNifty remains the same. 33,200 was a very strong support for BankNifty. Multiple times it had taken support at 33,200, and once it has broken that, now we can obviously expect 33,200 to act as a very strong resistance for the market, and on the lower hand we have 32,000 which will act as a good support. So coming to BankNifty, again here I am expecting a consolidation, a broader based consolidation between 32,000 to 33,300. So this is the view of the market what we have for this particular expiry, and based on this view itself we have also taken certain trades. So we have taken a short on 32,500 put options and 33,000 call options, giving us a break even of 32,000 to 33,500. So a 1,500 point range, because we have collected close to around 500 points premium from both. So 32,500 minus 500 is 32,000, 33,000 plus 500 is 33,500. So this is the range what we are trading with. We are short on 1,000 quantity each. Apart from that, we still have the same old ratio spread which we are carrying, that is a short on 32,000 month end put option and also a long on 33,000 month end call option. So I'll be attaching the screenshot of the same, both the ratio spread as well as the short triangle. And coming to today's trade M2M, we ended up with a total gain of close to around 2 lakh because the markets consolidated, the ratio spread gave us good profit, short triangle gave us good profit. Overall, we went up by a positive 2 lakh. So it had been quite a while since we posted our last video. So coming to the trades on Wednesday, Thursday and Friday, net positive we have close to 1.2 lakh. So 1.2 lakh plus today around 2 lakh. So all put together, we like over the course of 1 week, we made close to around 3.2 lakh. So if we look at this quarter, we are net positive of close to around 25 lakh net. So the gross is around 30 lakh. So which means on an average we have done close to 10 lakh a month. So this is close to around 2.5% every month, and this is more or less on the lines expected. So because we aim for around 2.5 to 3% a month, and we are more or less on the expected lines. So with this, we also come to the end of this video. So we have also told what the market view is and also what the trades are. If you have liked this video, do not forget to hit the like button, share this video and subscribe to Optionables. Thank you so much for joining.